How to qualify for a $50,000 credit line without personal guarantees. Before we dive in, some ads may appear during the video. Your support allows this channel to keep sharing valuable information for free. Now let's dive in. Did you know that nearly half of small businesses that apply for a $50,000 line of credit get rejected? Not because they can't pay it back, but because of simple errors in how they structure their finances or present their business to the bank. Imagine having the opportunity to fund growth, cover operating costs, or launch a new project, only to be told no because of avoidable mistakes. That frustration is real, but it doesn't have to be your story. Today, we're going to walk through exactly how to qualify for a $50,000 business credit line without relying on personal guarantees, the steps banks care about most, and how to position your business so you get approved faster. Accessing capital is often the bottleneck for growing businesses. A $50,000 line of credit can mean the difference between hiring that extra staff member, upgrading your equipment, or securing inventory before a big sales season. But banks aren't just handing out credit lines. They evaluate risk, repayment capacity, and business stability. Many business owners focus only on revenue or personal credit scores, but the truth is that banks are looking at a combination of business structure, cash flow, credit history, and even the industry you operate in. Missing any of these points can cause a rejection, even if your revenue is strong. Let's start with business structure, which is more important than many people realize. Banks prefer LLCs or corporations because they clearly separate personal and business finances. This separation demonstrates professionalism and protects both you and the bank. If your business is a sole proprietorship, you can still qualify for credit, but forming an LLC or corporation can improve credibility and increase your chances of an unsecured line. For instance, a service-based LLC with 2 years of consistent revenue is more attractive to banks than a sole proprietorship with inconsistent bookkeeping, even if the revenue is the same. Next, financial statements are your best friend. Banks want a clear picture of revenue, expenses, and cash flow. Preparing accurate statements for at least the past 12 months shows that your business can manage and repay credit responsibly. For example, if your business generated $180,000 in revenue last year with stable monthly income, the bank will see predictability. Include detailed expenses, profit margins, and cash reserves. Transparency builds trust. Think of it as telling the bank, "Here's exactly how I manage my business, and I can repay this credit line without issues." The third factor is credit history, both personal and business. Even if you aren't using a personal guarantee, banks often perform a background check on your personal credit. Scores above 700 make the process smoother, but even 650 to 700 can work if other factors, like cash flow and financial statements, are solid. For business credit, ensure your business is registered with reporting agencies, vendors are paid on time, and credit utilization is reasonable. These small steps demonstrate reliability and responsibility to the bank. Another factor banks consider is industry and risk. They evaluate whether your business sector is stable or seasonal. For example, subscription-based service businesses with recurring revenue are considered lower risk than seasonal product-based operations. If your industry is higher risk, you can compensate with higher cash reserves, longer operating history, or strong assets. Demonstrating stability in a volatile industry signals to banks that your business can handle repayment responsibly. Now, let's discuss strategies for qualifying without a personal guarantee. Many business owners assume a personal guarantee is required, but that's not always the case. The key is proving that the business itself can repay the line of credit. That means strong cash flow, accurate financial statements, and if possible, business-owned collateral. Some banks allow liens on equipment or other business assets instead of a personal guarantee. Focus on lenders that specialize in LLCs or corporations, as they often have more flexible options. Timing is another critical principle. Don't apply to multiple banks at once unless your financials are polished. Each inquiry can affect credit scores, and banks may interpret multiple applications simultaneously as desperation. Start with banks experienced in your business sector and then expand outward. Patience and preparation can significantly improve your odds. Let's look at a practical example. Imagine your business generates $15,000 in monthly revenue with $10,000 in recurring expenses. That leaves $5,000 monthly cash flow. A $50,000 line of credit represents roughly 10 months of available cash flow. This indicates to the bank that your business can manage repayment without personal backing. Combine this with solid statements and clean credit history, and your approval chances increase dramatically. For another scenario, a seasonal retail business generating $25,000 per month during peak season but $10,000 off-season can present a 12-month average, plus cash reserves, to demonstrate repayment capacity. Different industries have different expectations, and showing the bank a complete, accurate financial picture is key. Here's a step-by-step action plan you can implement today. Separate your finances. Open dedicated business checking and savings accounts. Avoid mixing personal and business funds. Update and audit your financial statements. Ensure revenue, expenses, and cash flow are accurate and transparent. Review and improve credit history, both personal and business. Resolve discrepancies and manage outstanding balances. Research lenders specializing in business credit. Identify banks familiar with LLCs, corporations, and unsecured lines. Prepare collateral or business assets. If possible, demonstrate that the business can secure the line independently. Apply strategically. Start with one or two banks where your business profile aligns best, then expand. To make these steps even more concrete, let's walk through 3 different types of businesses. Scenario 1. Service-based business. A small consulting firm generating $12,000 per month with minimal expenses. Accurate bookkeeping and consistent revenue make it easy for banks to approve a $50,000 line without a personal guarantee. Scenario 2. Product-based business. A retail store with seasonal sales. Showing 12-month cash flow averages plus inventory assets as collateral demonstrates stability and repayment ability. Scenario 3. Subscription-based business. An online service generating $20,000 monthly recurring revenue. Subscription models are attractive to banks because of predictable cash flow, allowing for easier approval of unsecured credit lines. By understanding your business type and cash flow profile, you can tailor your application to the bank's expectations and significantly improve your approval odds. Beyond immediate qualification, preparing for a $50,000 line of credit positions your business for future growth opportunities. Building credibility with banks opens doors for larger lines or loans, better interest rates, and smoother negotiations in the future. Remember, qualifying without a personal guarantee isn't about shortcuts. It's about strategic planning, accurate reporting, and demonstrating business responsibility. Business owners who succeed follow a process. They separate finances, maintain clean records, understand lender criteria, and choose their applications wisely. Let's recap. Structure your business properly. LLCs or corporations improve credibility. Provide accurate financial statements. Show consistent revenue, expenses, and cash flow. Maintain strong credit history, both personal and business. Understand your industry risk and compensate with cash reserves or collateral. Apply strategically and with the right lenders. Patience and preparation matter. If you implement these steps, you're not just aiming for a $50,000 line. You're creating a foundation for ongoing financial growth. If this video helped you, hit the thumbs up button as a thank you. Subscribe so you don't miss future insights on business financing and growth strategies, and comment below with questions or share your experiences applying for business credit. Your questions can help others understand the process and improve their own financing strategy. I am not your financial advisor, so make sure to seek professional guidance before making financial decisions. But following these principles gives you the best chance to qualify for a $50,000 line of credit safely and strategically, without relying on personal guarantees.